Yo, what's good, family? We're just gonna run through price action, look at this clean along today, and look at some of the stuff I've been doing and some of my kind of new fixes for how I'm gonna be trading and just some stuff to run through, right? So I just want to run through this really fast and we'll look at price action from the day. So overnight session saw this weirdly big move yesterday to here, and this is just kind of playing around, right? Overnight session was actually like weirdly productive, right? We moved a lot higher in PM and overnight, and now we're back into this new week open gap, right? So if we want to pull that up, we can see pretty much, here, let me just take this out. We see pretty much our new week open gap, but we're inside of it, right? And we're around our midpoint, just chilling. I'm not really using any of that info to my greatest. Like here we fill it, right? But now looking at this, we're starting to run higher on the bigger time frame, right? So this kind of giving me more of a bullish bias into the coming days, like at least tomorrow, we'll see. But bigger time frame, right? 1 hour, 4 hour, I'd say. I think we're bullish on the 4 hour, even the 1 hour. Yeah, 4 hour, 100% bullish on the 4 hour, right? All this generated liquidity above. We're now running this new week open gap. This looks really sweet to go see price run higher, right? So checking this stuff out, what I'm getting from this going into today is that shorts are going to be off the table unless we can displace through some type of low that validates this model, right? Because shorting, right, when we have this bigger time frame model is not smart. Why? Because check this out, right? If we have this now as a buy curve, why would I want to take some type of 1 minute short to move this slow rebalance lower when I can continue the move like this, right? So the reason I need to see a displacement through a low like this is because a low like that will validate us to now have a sell model like this, right? And when I see that, then my nice 1 minute fractal trades are going to run like this instead of running like this. You know what I'm saying? So I'm really trying to get the best opportunities. So that's why I'm not looking at shorts unless we displace through a low like that. So that's why on open, when we run all of this and do all this BS up here, where in the first like couple minutes of open, 9/3, literally on the first candle, ES was a bit cleaner with that, right? ES manipulates first, I believe. Yeah, we manipulate first. So there was a bit of discorrelation, honestly, here. Yeah, big time discorrelation, right? But ES manipulates higher, right? We play around. Then from there, we run off, give a little bit of a short entry here. I want to see at around 9:45, where is NQ? Because NQ looked like it's already been moving lower. So let's check that out, right? 9:45, we're literally right here. So we had a big SMT, and then this is kind of like our second accumulation, right? So I think the ES opportunity wasn't too bad considering this SMT just being so obvious, bro. But the issue with that is that we're trading against the draw, right? Where are we trading to? We're trading to around past the London low, right? And the target that this move pulls back to, right, is not only just OTE of this range, right, which we do end up filling really nicely. Let's pull that out. OTE looking like this, right? We do go ahead and we fill our range really nicely, work it, and then we move from there, right? But the point that, in my opinion, we were pulling back to today was pretty obviously, let me pull that out, is going to be our midnight open point, right? So if we see midnight open right here, we pull back, we play around here, and then from here we move higher, right? So at this point, once I see this, right, I'm pretty much like, all right, I guess there's no trade today. Like, we're chilling. We'll just hop off, right? But once I see price start to run higher, right, to take over this for value gap, right, what else do we take over? This 5 minute for value gap, or I mean, sorry, the 5 minute change, right? So we make a 5 minute change in the state. I'm now looking more so bullish for the intermediate time frame. Why is that? Because on the bigger time frame, right? Think of this as like 3 time frames. Like we have our bigger, like our 1 hour, 4 hour. We have an intermediate of like a 15, 5 minute, and then we have our execution, which is on 1 minute, right? So for my bias, I want to reference mainly the bigger time frame, right? And that's only going to give me a really good bias when I can get the bigger time frame and the middle time frame aligned, right? So that's why I'm not going to take a 1 minute trade just because my 1 hour says bullish. I need to see my 15 minute and my 1 hour say bullish, right? And that's why a lot of times we can take a 1 minute trade against the 1 hour drop simply because our 15 minutes says bullish. You know what I'm saying? So checking this out, once we have our 1 hour aligned, right, it's been bullish the whole time. Our 15 minute and our 5 minute, we want to get to be bullish. So when I see my 5 minute change look good, final piece I need is my 15 minute confirmation. 15 minute confirmation is going to be this one inverse, right? And obviously there's a fair value gap right above, but with the 5 minute change in the state, I don't think this is a bad opportunity. And also check out ES, right? On ES at the time, we had inversed our 15 minute fair value gap. So now there is someone on the 15 minute time frame that's literally just taking a trade like this, right? And they're just targeting this high for like a whatever 0.78, simply because this is like a very, very textbook point, right? When we have a high right here, like check this out. Literally, this goes for literally anything, right? When we have price trading and then we have a push lower, right? And we place in an imbalance in this leg, say there's only one imbalance right here. When we run through this imbalance and there's nothing but, I'm gonna redraw this a little bit, right? We have price running lower, right? Placing in highs, 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 highs. And then we have that one imbalance in the leg, and then we have price playing around. The second we run that imbalance, this is pretty much confirmed to not go to this high, because think of our concepts of low resistance liquidity run, right? Don't just think of it inverse as being powerful. Watch how now in this leg, the only thing left for price is low resistance liquidity, right? So once we see that, we're pretty much going to just rocket straight through. That's the same exact concept as this right here that we're looking at today, right? So I'm gonna move this down here and you can check this out, right? We have one fair value gap in the leg. The second that we run that, we're confirmed to be bullish to that 15-minute time frame, right? So this looks super sweet, right? And we end up pulling back, holding that 15-minute as support, looking really great, and then we just run higher. So like once again, bro, there's a lot of ways to get involved in this on bigger time frames. 5-minute was super sweet, all that stuff. Awesome, right? Awesome way to execute this. Yeah, sweet. But the way that I execute this, right, is watch this. On the 1 minute, right? That's my execution time frame. Now I have my 1 hour and my 15-minute aligned. This is what I'm looking at. I need to wait till I can identify in this pullback, right? I need to see a sizable pullback first. And in that sizable pullback, I need to identify a confident smart money reversal that gives me a safe entry, right? In my safe entry, I'm then going to manage it well and get involved competitively to ride the rest of this model out, right? So the way I get my safe entry, right, is I wait for price to move lower. Boom, boom, boom. We end up tapping around equilibrium of this range, right? Really not the most special, but we pull back. Do we pull back to our 5-minute change? I'm not too sure. We pull back to that 15-minute inverse. No 5-minute change on ES, but we do on NQ. And on NQ, we pull back 5-minute fair value gap. This doesn't look too bad, right? Looking to now spot my smart money reversal, right, back to the upside. So the way that I'm spotting that is simply by looking and saying, where's the market now going to align all of my ICT concepts, right? Like my macros, which 1050 to 1110 right here, boom, 1110, looking sweet, right? I want to see where can the market align my concepts of macros, premium and discount, look for my entry model, which is my change in the state plus an inverse, all of those things. Where can I see those play out and get involved confidently, right? So what I'm looking at on here is, number one, why am I trading ES versus NQ? Because ES simply is higher in the range and doesn't have as much, it looks stronger than NQ, right? Because if we look, NQ never ends up taking this as my take profit. So ES does, right? ES is the more bullish one. It's going to deliver my take profit first. It'll probably move a little bit cleaner too, since it's higher in the range, is more bullish. That's my best asset to trade, right? So now checking this out. The way I get involved here is I'm waiting to see, this is my change in the state, right? So change in the state. And the reason I'm not looking to snipe this at a bottom right here is because I don't want to be taking an unnecessary loss trying to catch this bottom when I, just to get all of this risk reward and like maybe a little more competitive of this, when in reality, if I'm trading it like this, I'm already able to get a sizable amount of risk reward. Like I don't need to fight for more, y'all. So the way I trade this is waiting for a change in the state, right? Once I see this, I market order around our little candle here, and then I ride this, right? Now, watch my procedure and watch why this trade is just so good, right? This looks like a normal little chill trade that you take, but these trades are always the best for me, where we can align that intermediate time frame and then just let it run, right? Why is this the best for me out of all? Because the way that I trade this is this. I'm waiting until price takes the initial model high, right? Initial model high. Once that happens, I'm break even. 100% break even. No thoughts about changing anything. Once I see that break even, I'm letting the market do whatever the hell it wants, completely detached from the money. I can take partials if I want, or I can just leave it for the draw if I'm confident, right? So the way I probably would have managed this is draw fib retracement. Is I probably should have taken a little bit off 2 to 2.5 here, maybe a little off at 1, but honestly, I just left the whole thing to run because I was pretty confident that we were going to go there, right? This pullback definitely had me a little bit scared, but yeah, I really liked watching this go. Really like trading this today. Was pretty sweet, right? This is the type of trades that work, right? So yeah, like I said, leaving this and then just take full take profit off at that high, right? And if I was trading NQ today, I definitely would have, like you saw in my position tool, cut this off here, right? Because right here is where we place in the SMT. So at that point, the market can do whatever the hell it wants. There's no reason in which it really has to run higher, especially with all this chop that we're seeing. So that's why I'm just taking it off there, not willing to risk, and I'm getting similar RR on both trades, right? So literally no problem today, boys. I thought this was sweet, right? Now I want to talk about one thing that I think I'm working on in my trading, and I think it's something that we all need to look at our own trading and make sure we don't have, right? So I've been getting caught up in this a lot, right? The concept that I referenced in this video of having 3 main like time frame lenses, I would say, where we have our bigger time frame, an intermediate, and a lower time frame, is kind of getting important to me, right? And that's because of this. Yesterday, I took a loss that outlines this, and we'll go over that in a second, right? But you need to see not just say we have big, mid. Here, let's draw this out: big, mid, and small, right? So let me make this boy a little bit bigger so I can do some illustrations, y'all. So big, mid, and small. If I want to take a trade on the 1 minute, I'm going to need to see either my medium or my big and medium come together, right? So I either need my medium or I need my big and my medium. I don't even know how to draw this, bro. But yeah, if I want to take a small trade, I need either my mid or my big and medium to work for me, right? And the highest probability, the number one best, is going to be big and medium, right? Just being having medium time frame aligned works, right? And that's where you can see some opportunities like today where we have maybe a 5 minute aligned to see this initial morning dump play out. And that's a reason that we can like to see that morning dump play out because we have the 5 minute aligned with it, right? But when I just have my bigger time frame or when I just have medium aligned, it's not the best, right? I want to be seeing big and medium aligned for high probability trades, meaning there's a good chance that this trade 100% plays out, right? So now this concept, right? Notice the one thing left out here. Taking a trade on the small time frame, which is what I always do, I cannot just have big here and then no medium. I cannot do that, right? Why is that? Because when you do that, you're letting the medium time frame cut you like a knife, bro. So you cannot be having this. This is like number 3, like this is L. Because when the big time frame is aligned, it tells you that eventually we will go there, right? It tells you, yeah, good, okay, it looks good, we can go there for sure. But the bigger time frame is obviously going to be delayed to new information, right? So that's not what I'm telling you. I'm telling you that the medium time frame will cut you like a knife because simply this, right? Say you're taking, and we'll go over this in a second because this is exactly what I did. Say you're taking a short because the 1 hour is bearish, but you're shorting into a 5 or 15 minute fair value gap. The medium time frame is going to cut you, manipulate you out, and then maybe go or just continue because 5 minute order flow and 5 minute market structure was dominant there over the bigger time frame, right? So the thing we need to make sure is that we have big and medium aligned or just medium aligned. And most of the time, these number one trades where we have big and medium and then we align out with the small, where everything is perfectly aligned, that's the best trades for me to take, right? Because it always, I'm finding those are always my most profitable trades, highest RR. I can run for the longest, have the most confidence in them, and they're just sweet, bro. Like 1 or 2 of those opportunities present itself each week. And if I'm just able to sit back and take those, we get money, we get bread coming in consistently, and we get a great win rate, great everything, right? And that's simply just by stepping back and waiting until we get big and medium. So now I want to explain how this is actually real and not just some BS that I came up with, because yesterday, I want to analyze this. Yesterday, you can say that in the morning, our bigger time frame is bearish, right? On the 1 hour, we're starting to sweep this liquidity, pushing through it with a nice big fair value gap. We break this low, playing again, taking another low. Boom. There's no real reason that we should bounce here unless you want to draw on maybe like a weekly wick or a daily wick, something like that, right? But even then, that question and that reason is very weak compared to the bigger time frame being overly bullish, right? The only other reason is that we have new week open gap above, right? Those are the only 2 reasons compared to the reason of big sell model, bigger time frame SMT. All of the stuff is way stronger than those reasons, right? So here's where I end up messing up. 1 hour was bearish. 1 minute here, if we look lower, and even like the 3 minute, is going to be bearish at this point. Why? Because market open at 923, we end up pushing lower. Here, I'll check out NQs. This is where I actually took the trade. NQ on open this day continued to push lower, right? And what we saw was this SMT ends up holding, right? But we see a nice push lower, looking really bearish. And then finally, we see price manipulate higher and place in an SMT here. So what is this? This is our turtle soup trade, right? So this is what I'm expecting, and I'm watching the market. I'm like, okay, I can see what we're doing here. This is turtle soup. We shouldn't go any higher than this. So the trade that I take is right here at this change in the state. I place my stop right here, and then I let this roll for all of this and then potentially all of this, right? Looking, this is like clean. I'm like, okay, this is going to be a bang. This looks sweet, right? But the issue is that I'm taking that number 3 low probability trade, right? Where the bigger time frame is aligned, but the intermediate time frame, the 15 and the 5 minute, is not aligned. Because why? Because right here, I'm shorting into a 15 minute fair value gap. So let's look at how the medium time frame stings me because I guess it was dominant, right? It's not my job to figure out which one is dominant. It's my job to build rules that allow me to discern it mechanically, right? And then follow those rules, right? That's the most important part, is actually following the rules. So like we just talked about, right? How is today an example of this being true? Because if we look today on ES, we waited for the intermediate time frame to align with the lower time frame, or with the bigger time frame, right? So now we have big and intermediate align. Once we see this 15-minute candle close, right? Now I need to see my 1 minute show me that. And right, how do I let my 1 minute show me that? I need to wait for a pullback and wait for a new market structure cycle where I can then insert myself, right? So like we see, I need to wait till the 1 minute pulls back and shows me something, right? We come back, we soup an internal low, we pull right back to this 15-minute value gap right here, looking sweet, right? Then I wait till my 1 minute is aligned to the upside. How do I see that? Right here, I wait for my change of the state, my small market reversal at around 1050 macro, all these buzzwords. I put them in, and my 3 time frames are now aligned. Now is when I execute, and now is when I bang. So let's bring it back to the concept of this, right? Big, medium, small, right? This is the worst way to take trades, right? Let's look at, finally, this is like our third combination. When we don't have either, this is the worst, because there's no reason that our 1 minute should play, right? It's just not high probability. So if you can see what I'm saying by this diagram, right? When we have medium time frames aligned but not big, that's okay, right? It's not the best, but we want to see big and medium time frames aligned. And then when we have big but not medium time frames aligned, that one's not as good as even just having a medium time frame aligned, because medium can show you and it can play, but it doesn't necessarily like have to. You know what I'm saying, right? So I'm just kind of yapping through this, but the whole point is that we need to see all of our time frames aligned. When we see all of our time frames aligned, that is when we get the best opportunities, best win rate, best everything, right? So walking through, the way to position yourself is to simply say, I'm not comfortable taking trades when all 3 of my time frames aren't aligned. Period, right? So that rule is going to save me a lot of loss in the future. You guys are going to see it, and I hope it can save you a lot of loss in the future, right? So I hope you guys enjoyed some learning from me today, watching through how I process my trades, look at all this stuff, go through everything. This is what you have to do, bro. If you want to improve, you have to really look at stuff like this, build your own concepts like this, bro. Figure out what's going on in your mind, and then figure out frameworks to patch that issue in your own mind, bro. So that for now, let you boys go. Thank you all for showing up, and peace out.